Welcome to the Commercial Real Estate Show, your source for insightful analysis and enlightening discussions. Hello, I'm Michael Bull. Thanks for being with us today. We have a fantastic show for you. We're going to talk about single-tenant net lease investment properties. You know, I think single-tenant net lease investment properties is a very interesting subject because it's interesting to everyone, right? There's institutional investors who are investing in this space. There are private investors investing in this space. And there's even people going online and investing as little as $5,000 through crowdfunding and through REITs, investing in single-tenant net lease properties. So we're going to cover quickly some of the basics of this sector, and then we're going to get into the weeds a little bit more. We're going to talk about cap rates, sales volume trends. We're going to talk about the impact of rising interest rates on single-tenant net lease properties. A lot of people are concerned about that. We're going to talk about the impact of the merger between the two drugstores, and we're going to talk about some tips for those folks who want higher yields in their single-tenant net lease properties. And then lastly, we're going to cover some gotchas that you want to watch out for when you're investing in single-tenant net lease properties. And please welcome my guests here with me in Studio One. We have Scott Lindstrom. He is Director of Real Estate and Development with Girard. They're a real estate development and construction company. They do business all over the Southeast and pretty much, I guess, all over the eastern part of the U.S. Scott, thanks for joining us.
Thank you very much for the opportunity.
Appreciate it. We also have Nancy Miller here. Nancy is Senior VP with a national net lease investment group with Bull Realty, and she sells single-tenant net lease properties all over the Southeast and all over the country. Nancy, thanks for being with us.
Thank you for having me, Michael.
Well, let's touch quickly on some of the basics of triple net properties for the guys who may be interested in investing in commercial real estate, or maybe they just were driving down the road in their car like, hey, what are these guys talking about? And then we'll dive deeper, like we said. So, you know, single-tenant net lease properties are basically freestanding buildings. They're leased to one tenant. They're typically a very long-term lease, and they're typically triple net, meaning that the tenants are taking care of all the operating expenses, taxes, insurance. And Nancy, is it kind of this mailbox money aspect of triple net lease sector that is really one of the appeals of this investing in these types of properties?
Absolutely. It's very hands-off.
Yeah.
It's typically very, very safe, and they're typically long-term leases, so the owner doesn't have to worry about renewals every year or so they can just sit back, and as you said, they call it mailbox money. It's very, very easy to do.
Yeah, I mean, that certainly has some appeal. I just want to go to my mailbox and get a check, right? So you're not worried about the taxes going up on the property. You're not worried about in most cases, true triple net. You're not even worried about the roof and those sorts of things, right?
Absolutely. It's really sit back and enjoy, and we're seeing more and more investors who've really gotten out of multi-tenant properties, and now they're doing single-tenant, and they're even building portfolios of single-tenant because they're so much easier to deal with.
Right. And then you mentioned the safety of these tenants. So when you're talking about national credit tenants, which is the majority of single-tenant net lease properties is what we're talking about, you know, Scott, the investors really feel safe with these types of tenants, don't they?
Yes, they do. Yes, they do. I mean, we, as a developer, we're always seeking out the highest quality tenants that we can with the best credit, because we know our money's made on the sale.
Mm-hmm.
Okay. And let's talk about some of the cap rates that people are seeing. So, of course, the cap rate is also the cash-on-cash return in your first year if you pay all cash for a property. And we've seen some trends in cap rates that have really been compressing. What are you seeing out there, Nancy?
Well, year over year, 2014, we had cap rates averaging about a 6.67% cap rate on average in the $1.5 to $3-ish million price point range, which is the most common price point range. That has dropped, cap rates have dropped or compressed to 6.25%, which is a decrease in cap rates of 6.3%. And we're always saying, when will they stop decreasing? But they continue to.
How about sales volume? What are you seeing there?
Sales volume has also increased year over year. In 2014, there were about 905 transactions in this same sector, and this year we'll see about 1,072 transactions, which is an 18% increase, which is quite high given that cap rates are dropping, but transactions, so there's a lot of demand for this transaction to keep going up.
Yeah, well, it shows the popularity, of this space and this sector for investors, and I guess it also shows that some of the tenants are getting a little more active, right, Scott, than they were maybe in the recession.
They are. The market is and has come back, but the tenants are being still more cautious about their growth, which is good, and I think it's been healthy growth.
Yeah. Well, let's talk about, again, some of the cap rates you're seeing, but now for some specific tenants. So I guess the drugstores are typically the ones that are considered the most safe. Are those typically the lowest cap rates? What are you seeing there?
Typically, you're going to see a 5 to 5.5 cap rate for a Walgreens, CVS, Rite Aid, so forth, on a long-term 25-year lease. It's a flat lease. There is no upside there on a new construction. So whatever my buy-in cap rate there, actually with inflation, a 5.5% cap rate becomes something lower 20, 25 years from now.
And those cap rates on those types of drugstores, those are typically really long leases, what, 15 or 20 years?
Well, the 25 years, and then they have 5-year options typically. And for the pleasure of doing business, not to upset anyone who might be listening, for the pleasure of doing business with one of those drugstores, you have a 50-year lease with no rent bumps, typically. So.
Yeah, that's interesting. And since we're talking about drugstores, there's a lot of information in the news about the Walgreens Rite Aid merger and how that might impact the sector. So for a listener that owns one of those drugstores, what might they expect?
Well, the combined companies will be about 12,500 locations. At the present, from what I've read and researched, they are going to keep separate names, the Rite Aid and the Walgreens name. The cost efficiency is really the driver of this, and because people are buying medicines and drugs online, in-store, and so forth, they want to be more efficient. Ultimately, I believe that they're going to wind up closing, whether it's one brand or the other, a couple thousand stores, and obviously the FTC is going to be involved and scrutinize this, just like they did when Dollar General and Family Dollar were in discussions of what would be the impact of if one bought the other and so forth. So I think it's going to be I think time will tell, but where there's redundancy and cannibalizing of stores, we may see some stores close, but not to a huge extent.
Interesting. So if you own a Rite Aid and there's a Walgreens across the street, you might be shaking in your boots that they're going to go dark on the Rite Aid.
Yeah, it could be. Typically Walgreens average sales per square foot are higher than a Rite Aid, but in some cases, if the Rite Aid is a superior location, chances are the decision would be made to keep the Rite Aid open and maybe rebrand it over time or whatever.
Are there already some deals for Rite Aids today? You're seeing some higher cap rates of people trying to trade out of those, or they're kind of waiting?
It's kind of waiting. I don't know what you've seen.
Well, we're looking more at the opportunity, how much term is left on some of those leases when they do go dark, because they will be sublet in some circumstances, but if there's a small amount of lease term, we see opportunity in the value of that location, the real estate. And as a developer, that could be a play for us to redevelop the property.
Right. And of course, going dark means typically that the tenants moved out, they've shut down, but they're still paying the rent. But these are credit tenants, they're going to pay the rent, whether they sublease or do whatever they do. But you really don't like a dark store, when you're investing in real estate, do you? What about some other cap rates? So what are some, like, say, dollar store cap rates now? For some of the dollar stores, particularly Family Dollar, which we do a lot of work for, it really varies by state, and jump in on this, Nancy, if you want. But we've got locations in Florida that are trading below 6. Then we've got areas in Georgia, Alabama, kind of the southeast, that are about 6. I'd say 6.25 to 6.5. And then we're looking at some stuff up in Maryland and DC that we expect to get some sub-6 numbers. Interesting. Now, sub-6 kind of new for that tenant?
It is, but like I said, it's being kind of driven by the demand that some investors want properties in certain states.
Yeah, they want to be where they want to be, right?
Well, to that point, that there are tax-free states that an investor, Florida being one of no state income tax, Texas, and a few others around the country, often when someone calls us, they'll say their parameters, whatever it is, whatever type of single tenant, they'll say, I want to be in this state, this state, this state. We always think Florida is simply because they have a second home, but that's not it.
Well, great. We'll take a short break. When we get back, we'll talk about the impact of rising interest rates. Stay with us. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit CREshow.com.